Welcome to Drill on Earnings. We've got the latest quarterly results from F5. This is the business story about one stock and a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. F5, such an important company. Yes, it's part of the S&P 500. Yes, it is a tech giant here on the West Coast, but it's way up there in Seattle. So maybe it doesn't get the attention that other Silicon Valley companies get. But so important. There's the Q1 2025 numbers, quarter ending in December. Wall Street expected sales of $716 million. It was $766 million. And the worm has turned at F5. Their growth, which was, well, there was no growth a year ago. Now this business is growing at an 11% clip. Really strong quarter here. This is better than Wall Street expected. Specifically, $766 million in revenues, operating profits of $205 million, fantastic gross margins, and an actual profit of $166 million. What does F5 do? They make apps work. It's app security, but it's more. They talk about the ball of fire, which is all the crap that goes into making an app work. I can say crap. I can do that. And makes it simpler, they say, helping their businesses, helping their customers run their apps at faster speed. And while you can see their business is also going through a change, they're changing the fan belt whilst the engine runs here. So the perpetual license business, always seeing big fourth quarter numbers when the spend kind of exhausts itself, that's gradually shrinking. But their system sales business really grew great. Their software business really grew great. Their operating margins now at 27%. Fantastic improvement for this company. And so yeah, stock market liked it. And after I was trading, the stock's up 14%. Again, on a bad day for tech, and after 47% growth in the last year. So very strong quarter from F5. And the CEO, friend of the show, he's been in the drill down before, François Locoh-Donou. Yeah, he's French. That's why I could say François. François had some interesting comments on the quarterly call. Here's what he had to say.
As it relates to the news from yesterday and the discussion from yesterday around the size and scale of AI factory build-outs in the future, that's tied to our opportunity to go into load balance in front of clusters or even go inside of clusters and provide traffic management intra-clusters. We are not yet, very early days in that opportunity. We haven't yet started to actually drive revenue from that opportunity. We think it's a very sizable opportunity down the road, but it's very early days and frankly too early for us to quantify it. In general, though, I would say that the stance of F5 is if in fact we can have more open source models that allow more enterprises to adopt AI faster and build their applications, and it creates a faster proliferation of AI applications. That is really good news for F5 because it means that we will have more opportunity to do high performance data delivery for data stores and more opportunity to secure AI workloads. And if in fact it is cheaper to build and train these models than we thought it would be, that is also good news because it will accelerate adoption of AI. So we're at this point, it's early days.
So take it from the CEO, good things going on at F5 there, but what's your big drill on earnings takeaway and what's the one number that tells you a whole lot? Well, Q1 earnings for F5, Q1 2025 earnings, the quarter ending in December, $766 million in revenue. Nice growth for this company, finally, a business that was shrinking a year ago with $166 million in revenues. 11% growth is great, but maybe the most important thing, the drill down earnings bite, the one number that tells you a whole lot, 72% of sales were recurring revenues. This is a strong business, this is a steady business, and it's a business that's finally growing again. All right, thanks for listening to Drill on Earnings. I'm Cory Johnson. Check us out on YouTube and on all the socials.